In today's video, we're going to discuss the question on everyone's mind. Is now a good time to invest? With the market seeing a steady decline in 2022 and many investors pulling out, it's understandable to feel hesitant about putting your money into the markets. But is now really a bad time to invest? Watch this video until the end to find out. Let's take a closer look. While it's true that volatility still dominates and economic data has softened, it is important to keep in mind that the markets have always bounced back historically. And even the crypto market, which has seen its ups and downs, has slowly improved over time. Inflation is also likely to push asset values higher in the long run. So the key here is to take a long-term view of the markets. So what do you think? Is now a good time to invest in your opinion? Let us know in the comments below. We'd love to hear your thoughts on this topic. As you may know, all three major indexes have seen significant losses in 2022, with the Dow Jones, S&P 500, and NASDAQ all falling more than 20% from their historical peaks. This downturn has been challenging for many investors, including the legendary Warren Buffett, who has seen significant losses in his portfolio this year. So what's causing these sell-offs? One factor is the high level of participation from new investors during the COVID pandemic, which has led to a greater intensity in the market's movements. But we're also seeing the effects of liquidity exhaustion in many businesses, with stock values declining and insufficient cash to compensate for the selling pressure. It's important to remember that while current market levels may offer opportunities for long-term purchases, there may be lower values ahead. First, let's talk about the crypto market. It's no secret that it's been in a state of turmoil recently, with two major collapses and a long period of steep decline in prices. And with a 70% drop in total market cap since November of 2021, crypto winter may be here to stay for a while. But it's not all bad news. Despite the challenges, many crypto companies are still finding ways to thrive. And with careful planning and strategy, it's possible to weather the storm and come out on top. Now, let's turn to the bond market. U.S. Treasury bonds remain a popular investment, but the benchmark 10-year bond has seen losses in 2022 due to changes in the market and concerns about inflation. However, we've also seen a sharp increase in capital inflows in November 2022. Which may indicate that market sentiment is improving following the sell-off earlier in the year. What do you think about the current state of the stock market? Let us know in the comments below. The current gold market and the overall bleak macroeconomic outlook aren't positive. While it has seen multi-year highs recently, it's struggling to maintain its momentum, and the prospects for further gains in the next 12 months seem weak. According to a World Bank report, we can expect the commodity to fall another 4% in 2023. One reason for this is that demand for gold will be reduced as many countries' currencies tighten in the midst of an economic downturn, as well as the high cost of living. Higher interest rates also reduce the allure of gold, which has traditionally been used as an inflation hedge. But it's not all bad news for gold investors. While the yellow metal may see a flat market in 2023, higher prices are extremely likely over the next decade. Now, let's turn to the overall macroeconomic outlook. Businesses face many challenges, from high inflation rates and geopolitical tensions to rising energy costs and disrupted supply chains. There's also the possibility of a credit crisis and a decrease in liquidity as central banks around the world tighten credit conditions to curb inflation. This leads to pervasive pessimism and a decrease in consumer spending, which can domino affect businesses and their spending. In the United States, we've already seen large corporations cutting jobs on a large scale, and this trend will likely continue as the economy shows continued signs of weakness. So, what do you think? Are you feeling optimistic about the future of the gold market and the overall economic outlook, or do you see more challenges ahead? Let us know in the comments below. Is now a good time to invest? To answer this question, it's helpful to look back at history and see what we can learn from past market events. We've seen several significant market events over the years, from the inflation peak in the 1980s and the dot-com bubble in 2000 to the housing credit bubble during the 2007-2008 financial crisis. And in each case, for investors who chose good companies and avoided the frothy market peaks, there were great deals to be had. But it's important to remember that good times and bad times are a natural part of any market. The next year or two may be rewarding for long-term investors who are buying stocks regularly. But for traders looking to make quick profits, these markets may not be as favorable. It's also worth noting that just because stocks or cryptos are on sale doesn't necessarily mean that now's the best time to jump in. As we saw with the Luna disaster, not all projects will be around in a year, so it's important to be careful when considering investments in the crypto market. So what's the verdict? Is now a good time to invest? As of December 2022, some stocks and cryptos may offer good returns over the next few years. But given the poor economic outlook and the prospect of more central bank tightening, it's unlikely that we've hit bottom yet. If your situation allows you to take advantage of this opportunity, now might be a good time to invest. But it's important to be realistic about the potential for lower prices and to watch the value of your holdings carefully. Shelby Cullum Davis once said, "You make most of your money in a bear market. You just don't realize it at the time." As we all know, inflation has been on the rise globally, and it's likely that the Fed will continue to raise interest rates in response. This can be a good time to buy regular amounts of major indices via ETFs, as they may have value when the markets recover. Still, it's important to be comfortable with the idea of your portfolio declining in value over the next year or two. Individual stocks, especially in the tech sector, can be risky and may see major declines. To avoid long-term losses, it may be safer to stick with the broad markets. Other assets like bonds, gold, and crypto may also be affected by short-term market currents, and it's important to be cautious when considering investments in these areas. While bonds are typically seen as a safe asset, the longer-term outlook for debt is uncertain. Gold may not see much action in 2023, but it may be a good place to be over the next decade. It's important to remember that inflation may not have run its course yet, even if it ebbs in the coming year. So what do you think? Is now a good time to invest in your opinion? Let us know in the comments below. And don't forget to like, comment, and subscribe to our channel for more financial insights and updates. Thank you for watching.